Hey Kevin, this is for Thursday, April 22nd. This is still an S&P chart. Um, I'm just going to jump to the positions we currently have. We're in this lean hog spread. That's October D's came off this area 390 nicely today. Would be nice to see ours do that, right? Let's see here. I hate it when this stuff gets all discombobulated. Come on. God damn it. There it is. Son of a bitch. All right. All right. Hold on a second. All right. There we are. Okay. So we settled below this today. That's technically a sell signal. There's no two ways about it. 625 even. 625 even. I'm just going to leave. You can see it right there. Channel 1, 2. I want to see a settlement above negative 505 to turn this thing north, and that would be above this. No, it wouldn't, but close enough above this high as well. I think we keep that 660 stop in there just out of pure safety. You got a little support here at negative 705, but we don't want to see it get down that far, do we? No. So there you have it. We settled negative below this formation. Would be nice to see us open back above it and then trade higher on the day, of course. We can take a look at some of the other spreads. This is the June AUG. That is the one we just got, isn't it? Yeah, we're in that. This is our resistance, by the way. This is our get out of that spread resistance area. What do we have here? Here's the AUG October. So I need to revise this channel formation. We've got 7, just call that 710 even, as our channel resistance, below which this market remains in a secondary sort of in a sell mode. And we also have resistance at 690.92 half. So if we can settle above it, I could also draw an extreme, which is probably going to be more accurate in the coming days. This is the level we really want to see this market settle above, and then we're off to the races. But 710 even is an area on this August-October spread. So we got June AUG, we got August, October, October once again, same formation. Bearish on that. August, October, once again, bearish on that. I guess that kind of rounds it out, doesn't it? Here's October D's. It actually perking up, settled higher on the day, above this high of this low. This is a spread, honestly, I like right now. We tested this whole low area here. So, there's that. I think that kind of rounds out the June AUG once again. So we're below this. We want to see it get back above at 625. All right, what else we got? We've got, I'll look at the live cattle spreads in a moment, but right now we'll take a look at corn. Corn does not look good for us at this point in time. We've got this little channel bottom outside day, blah, blah, blah. We need to see a settlement above 18.2, obviously, and then it looks good. But until then, it looks like we're about to retest this long-term support area here at 21.6. Okay, I think that's likely here. I don't like the way that looks. Excuse me. Sorry about that. Okay, this is Dees closing in on a long-term channel formation. I could be convinced to buy this. Still at 33.7. This is all corn. So this is July Dees. We're long it. I'm willing to go long Dees at 33.7. Dees March still has a way to go before it tests its channel bottom at 16.4, 16.3. It's at 15.2 right now. This was not significant. It looks worse. Oh, we just looked at that. Yeah, this is the real structure here, and I just showed you. You know, it says 16.3. Same one, July D's. Yeah, we want to see a settlement today above 18.2. Settlement in the next few days above it. If we settle below 21.6, it does not look good. We need to get out. Let's see here. Take a look at the live cattle spreads. We're in the one still, and that looks good right now. You know, the June AUG going our way. Come on. There you are. Okay. Backed off again today. Here's our resistance at essentially par or even. Get above that, looking for 1.0 basically. And here's the support in the same spread. This, by the way, is August, October. And we're already familiar with June AUG because we've been in it for a while. There's that channel bottom at negative 1.1, just call it 150. If tested today, willing to buy it. So I'm going to jump to June live cattle in just a moment, but I've got the newsletters there. Here's that other spread, October D's, that we've looked at selling up here. If we do nothing but, we could buy it with the settlement above, but this is still in this 340, you know, area. If we get up there tomorrow, you can give me a buzz and I'll give you the precise numbers, but still bearish below that. Still weak below that. Okay, let's go over. In fact, I don't think I'm gonna. I think I'm just gonna look at the newsletter itself. Here we are. Okay. So we did settle below this formation, but not by a wide margin. And in fact, the August contract did not even test this channel bottom, which tomorrow is at 115.30 August. And I was telling in the audio portion that if one is looking at going short the broader complex, they really need to wait a August contract settlement below 115.30 tomorrow. Until then, this is just a test. 118.52 is the level today. We bought that call. I'm not quite sure where it is. We don't want to see another limit down move today. So I do think we should discuss in the morning what is a monetary stop loss of $300 or $400. I think that's as much as we really want to risk on this thing. I don't know where that would put. I don't know what the delta is. I know it's like a 121 half call. It's probably got a delta of 30 or 40. And so if we get a 3-point move to the downside, that'll drop at least a full point against us, which in itself is $400. So, you know, we'll talk about this tomorrow. But bottom line here, and I will pull up the August contract, and that will show, boom, right there, 115.30. That's our core support right now, above which this market can stabilize and turn up again. But, you know, we've had a spike high come back. We've had an attempt at it again come back. You know, I am just as, if we settle below 115.30 August contract, I'm actually fine with going short the futures itself, this particular contract. And obviously, that we would also bail out of that call. Yeah, so there's that. We should discuss cattle tomorrow. You know, I'm just thinking out loud here. Excuse me again. You know, you can call me in the morning if you like. I'm not quite sure how busy you are when these we're kind of heavily involved now in the meats, the livestock. So, you know, if you want to call me 15 minutes before they open just to go over everything, I'm totally okay with that. All right. So, you know, a monetary stop on the call wherever we bought it. I think $400 is our worst case for the day. I think below in that lean hog spread that we bought today, below 6.6 is kind of a bailout point. I think just to be safe. And just thinking out loud here, the corn, I'm not too worried about. I don't think we're going to settle below that 21.6 tomorrow in that July D's corn spread. We're just watching that right now, but I think we are going to test it here in the next day or two. thinking, oh, the spread for June, August live cattle, that looks good. That looks like it's going to continue south, and we actually may test that 1.9 here in the coming days. So at that point in time, we want to bail out of that spread, right? Um, I guess we didn't talk about that entirely. So there's that. Um, Let me take a look and see if there's anything in here. I'll take a quick look at feeder cattle. We talked about this today. I think this is our base of support at 155.10. We could test that today. That's not altogether different than August live cattle at 115.30, I'm guessing. And so we could have a double sell signal tomorrow in both of these contracts. And if we were to go short August on the close, August live cattle on the close at below 115.30 and bail out of that call in June, I think we would want to see a settlement in this contract below 155.10 just for bearish clarity, if you will. And take a quick look at the spread. Just nice to look at, isn't it? After waiting all of this. So yeah, another day like this, we actually could test this today, possibly. So we should talk about, how we want to play that. We just want to buy it back, right? I'm guessing. All right, ethanol, RBOB, crude oil doing nothing. In light of all this, crude oil is just flat. July corn, worth taking a look. We're closing in on this long-term support at 347.5, which is illustrated on page 2 of the July letter. Long-term area. I think we could have a resting bid here for the day. And the same is true as we discussed earlier with regard to wheat. Look at that weekly chart, I suppose. Oh, I screwed that one up. I erased all of my charts by accident. That's a Kansas City thing. But we'll take a look at this. Excuse me. Sorry about that again. So we're expecting this in the next day, 2 or 3, and that is that long-term channel structure. I think putting a bid in there at 433 and even is good again. And then if we stop out at 428 even, we have to be just as aggressive at the end of the week. That is on Friday, with a settlement below 432 and a quarter, and definitely below 428 even, which is a 1% violation of 432 and a quarter. We need to go short wheat. You've got little levels all the way down, but it actually looks pretty horrible as we continue into summer trade. Some of these grains, I'm going to talk about soybeans right now. I mean, soy. Oh shit, that's not even it. Here we are. That was an audio file. Come on, beans. July beans settled clearly below this channel formation, and that is a legitimate channel formation, if you will. This is the move low here. So you've got a high, a low, high. We're below it. We've got a descending channel bottom, also at 874.5. We closed below this today, and I'm telling subscribers to expect this 822 and 3/4 over the next 3 to 5 weeks, possibly lower. I mean, it's a stair-step approach, but this level 822 and 3/4 is likely over the next 3 to 5 weeks now. And there's the possibility of this, quite honestly, after this rounding top and this tight consolidation, once volatility picks up. Could we bounce here for a month or two? Certainly, but this 874 and 3/4, I'm going to do this here right on the, because I'm actually drawing a blank as to, I'm going to put up another chart, identical, and I'm just going to eyeball it. It's only an eyeball situation, so it's not entirely exact. Yeah, that takes us down to the 7 handle for sure. Excuse me again. Sorry about that. Yeah, so this is rough guessing, 780s. Not all that different from the 740s, really. So we are below this. Do we want to look at buying out of the money puts? I mean, I know volatility spiked, and the last thing we want that is consolidation down here for the next week and a half, 2 weeks. But this is the grain market, and it seems to be on a move right now. So we have a settlement today below this. That's pretty meaningful. We could wait a day or two if you like. Um, corn. Does corn need to settle below 347.5 at the end of the week or next week in order for soybeans to get the green light to continue south? Does wheat need to settle below 432.25 for the same? I mean, is this jumping the gun being short soybeans, or is this an early lead on a long-term play? Um, Maybe it is. Maybe we wait to see what corn and wheat are doing. But right now, beans are suggesting they're going to continue south through May activity. I'll let you scratch your head on that one for the night. Um, let's see here. Canadian dollar sold off after yesterday or the day before's development. What do we have here? Come on now. There it is. So secondary sell signal today. We should get down here probably by the end of next week in the 73, 47 area, which I actually like, to be honest with you. I like this as a are we going to try to buy the Canadian dollar again? Sure, why not? It's consistent with this low area, at 73.30. So, we wouldn't be the only ones looking to buy this area, and it's likely now. We settled below this channel bottom 2 days ago and this channel bottom yesterday, and so here we are. All right, so we can talk about that as well if the Canadian gets into that low territory. British pound still weak. Close the week below 29.87. Just a couple days from now, this market looks weak into it would be below this 29.95, which is this low after the consolidation. I just think it's a good short sale, buying out of the money puts. Volatility should be pretty subdued, and the market could continue where maybe this low at 24.93. So maybe we could look at some British pound puts, perhaps, assuming we settle the week below that area. Gold rallies, closes above yesterday's high, which is the move low. That's pretty constructive, at least short term. Where are we going? I don't know. You got some low area here that we're familiar with. This area here is going to be your ceiling near term, but we came close, I suppose, to testing the speed line, which tomorrow is at 64.5. So I know we're not interested in gold right now, but it's good to at least watch this. Okay, silver put on low, and it's obviously doing a little bit of the gold thing. If we close above Friday 14.95.5 and we're at 91.6 now, that's actually a stabilizing event for this market. Otherwise, it remains bearish below this 269, 15.269. Copper looks like it wants to test this lower area at 84.37. That's that channel bottom, which is convergent with this longer term channel top. This is our base of support, but this market is just consolidation city now for a couple of months. And 10-year notes, yeah, they would be up. Well, would they be up on gold strength? No, you'd think they would be down on gold strength. They're not obviously highly correlated, but roughly. Anyway, this is still a support region, and this is the long-term speed line, and this channel bottom at 13 to 15 all week long. Closing back above this formation is a stabilizing event, which is consistent with the high of the low, which is at 123.07. So this market can continue higher. As we close in this territory on Friday, I think this is in reach again if you're looking big picture over the next several months. Bottom line with the notes, you don't want to sell this market until we get below 122.13. I'm guessing NASDAQ is still pushing upward and onward, sure enough, above this high from last October. The S&Ps are closing in on their high, but they haven't closed above it, whereas the NASDAQ did so several days ago. Is that a precursor? I don't know. Sugar, precursor to the S&P. Sugar 1305 high. 1301 is this formation. If we close above it, as I've been saying, I wouldn't mind going long. You know, maybe we look at this on Friday. If we're settling, if we're trading above 1301 even, we could buy some calls. Cocoa continues south following yesterday's failure. And so this area is in reach. This is what we're thinking, I think. Likely. Buying puts is probably a little expensive right now, but that's what's happening. And I think I'm going to wrap it up here with coffee. 20 minutes. Same old with coffee. We're in this just below this whole resistance area in here, which is a wide range. And below which this market longer term remains bearish. And there it is. If we close Friday below 76.37, that's a bit of a go with. That's an ascending channel bottom that goes back to the February low. So I would say we could buy puts, and this is still a relatively low volatility market. So we'll watch that. There's some Friday developments we should watch in the softs because they're all very close. And this is a weekly continuation for coffee. At this stage, does not look likely to give the buy signal. 93.51 is this channel formation, and 94.20 is the high of the low. So doesn't look likely, but if we settle Friday above 94.20, good signal to the upside. And that's all I'm going to babble about. Feel free to call me at 7:15. I'm talking Mountain Time. I think that's 6:15 your time still. You know, just ahead of the cattle. But you've got my opinion about that. I guess I'll reiterate. Monetary stop in the call of $400. I could go cheaper. I could be talked into cheaper. I could go $300 if you like, which I think would involve a substantial follow through to the downside in August, or in June. Buying August at 115.30, 115.32, 115.35. The actual futures themselves? Question mark. The lean hog spread. Stop loss below 6.60. And we're in the corn spread, not worried about that right now. We're in the June hog live cattle spread, not worried about that right now either. Just want to make sure we don't get cleaned up, taken to the cleaners on the lean hog spread or in that out of the money June live cattle call. And that's all I've got to say for Thursday. Talk to you tomorrow.